Hey, good morning, everyone. Welcome to the room. Trading futures does involve risk, and it's not suitable for all investors. Information in the presentations for educational purposes. It's not a trade signal service, not intended to be financial advice. Hope you're all having a good week. Mixed sentiment on the weekly chart with these long tails, and then last week and the week prior opposing tails. We've got a fair bit of news this week, along with continued earnings. So with some of the news announcements, there's lots of speaking engagements as well. I thought Powell was speaking at some point here. I'm just looking through the list here. Yeah, Thursday. So I would expect a move down. Let's see. Thursday midday, he's speaking. I got those. Going back to the daily chart here. Kind of coming back to this underside of the trend line. We're talking about puts. Probably gonna need to buy some more, depending on how we close today. We're gonna have a gap down already today. So the ones that we've got going the 20th and the 27th, probably close out the ones this Friday, either at the end of the day today if we have a big selling day, or tomorrow. Try to hold them as long as I can, but if you get a big move down, you don't want to, and then let's say you get a big move down and then you move sideways the next day, that option's either not going to continue making money or just kind of lose money if it goes sideways, even if it goes down a little bit. As far as let's take a look at the overnight. We're going to be basically all underneath yesterday. I got to update my gaps. Two. So we traded at the 50 short, came down, didn't quite touch the 50 long, but got close. We're gonna gap down today and be kind of, maybe close to the bottom of yesterday's range. In terms of buying more puts, so like if we were to rally, I would try and do, let's say we gap down and we rally and we close up at the 50%, just buying at the money, or maybe just one or two strikes out the money if there's a big drop in price, if there's a big price break there, but usually doing at the money. So those current ones are 433 and 435 on the SPY. Yesterday didn't really have much, just the 15-minute took us up for plus 20, and that was basically it. So doing its job there, and that was it. Initial breath reading not terribly bearish. Advanced decline line's pretty bearish. And then here's a minus 1,000 tick off the open. So as usual, ignore the first couple of ticks. We're going to go kind of up at a 45-degree angle towards the zero line. And then in another 20 minutes or so, we'll probably establish somewhat of a high tick for the morning to be our relative high tick. And then top of the hour, we've got businesses, inventories, and housing market index. There's lots of talk of all these better than expected earnings coming out, but I think next quarter is going to be a little bit of a shock with lower than expected earnings because of the high gas prices from this last quarter, or the what would be the current quarter for earnings, the next quarter. Basically all the shipping costs. So our nicey ticks here moving. This is that kind of 45-degree line moving to the 0 line. That's the only reason I have that 1 period moving average. I'm not really concerned with the shape of the candle on the nicey tick. That's why it's a bar chart. But that 1 period moving average helps it just kind of show me the trend a little bit better. That's all you're trying to do with any chart tool that you're putting on top of your chart itself, or like the Heikin-Ashi candlestick that goes on top of the actual chart. It's just to help visualize the trend, see the trend. This tail doesn't stick out above on this inverted hammer here. The tail doesn't stick out above. It's not the high of the day, and the tail doesn't stick out, so nothing to do there as far as a short. This candle does have a tail that sticks out above, but it would need to kind of, I wouldn't really call that a hammer. It's more of a spinning top, which spinning tops can be just as good of reversal signals as hammers and inverted hammers, but wow, look at our advanced decline line all the way came down 1200. So lots of stocks here settling out. And that's what we saw yesterday, a very slow morning before this consolidation here for the first half hour, and then got moving. I have this retracement up here just as kind of a reference point to show that, yeah, we went through the 60-18, kind of made this V reversal. Then we traded up, and this would be the -23 if it had traded clean. But just kind of using that as a guide for, I guess, a starting point for the day is all. So you don't want to get overly short, let's say, right on the open when you have, when you start with a -1000 tick or an extreme tick like that. The nicey ticks will come back up. Sometimes they don't make it all the way to the 0 line, but most of the time, you're gonna come back up away from these -1000s to make now we have a relative high tick of 190, which isn't very high. But if you just shorted immediately, the first candle off the open, yeah, you know you're underwater. One way to combat that at least a little bit is to wait for the low to break. If you really, really wanted an excuse to get short at some point, instead of just selling at the market, waiting for the low price of the candle to break. We talk about that for a 15-minute. Let's say you're long a position and like a swing position, and the market gaps down. Wait 15 minutes and then put your stop below that first 15-minute bar. That way, if we just gap down and then rally, you're not closing out at the low of the day. Similar size bodies here on these candles, back to back to back. Pretty tight range here so far. So our 15-minute, the low is going to be a 68.25, and the high is going to be a 78.75. So those are our two entry points, 78.75 and 68.25. So more than likely get hit here shortly. Yeah, we're at 78.75 is one tick above the high for the long entry, and then 68.25 is one tick below the low of the first 15 minutes for the short entry. I can mark those here until we get to the 30-minute high. So you're just using essentially a buy stop and a sell stop. You can either, the simplest way is just have a single order where you put like if you're trading two contracts, your quantity is set to 2, and you just drop one order as the long, and then one order as the short. And so if the long triggers those two contracts, then your sell order for two contracts becomes the stop. And then once the trade gets moving a little bit, then you just go in and click your profit target at the plus 20. And then if you're taking the opposite ones, then you can come down and add two more contracts to the short if the long triggers, so that if it doesn't make it to plus 20, you will get stopped, and then it will reverse. The other option is you can do a trigger order, or like a bracket order, where you've got your buy that goes in, and when that gets filled, the plus 20 goes out and the stop goes out, such that if the plus 20 gets hit, then it's going to cancel the stop. And if the stop gets hit, then it's going to cancel the plus 20. But you still have to go in if you want to take the reversal and then put another bracket for the other side of the trade. So either way, there's a little bit of manual clicking to do. And I tag team with a close friend of mine, trading friend, and if one of us isn't around on a particular day, we kind of keep an eye on each other's account. We each have a separate account that's just dedicated to the 15-minute. So he has access to that, I have access to his, and we can kind of just keep an eye on it for each other. If one of us isn't there for the day, or like if I'm not going to be able to trade, I'll have him take it, set the order for me, and vice versa. So I can make sure I'm at least taking that 15-minute opening range breakout every day. And I'm sure there's a way you can automate it. I've dabbled a little bit or kind of poked around to see what platforms or things are out there and ways that you can do some automation like that, but I haven't gotten too far. And I mean, there's ThinkScript code. But a lot of the ThinkScript code is more for studies and indicators, not necessarily for executing trades. So it's definitely simple enough where you could automate it. You'd probably still have to, well, yeah, I'm sure you can do enough if-then rules to make the orders cancel and make, if you get filled on the long and it hits its plus 20, so it's not putting the order out there for the short and all that stuff, but not exactly my wheelhouse for automating. Plus, I'm here anyways for the day trading part. That's not automated, not going to be automated for this type of trading. So there's always going to be a demand and a need for individual traders, some type of either whether it's a pit trader, local, something like that, short-term traders, to create a market, create the liquidity so that these bigger investing positions, bigger positions can come in and put on 1,000 contracts over the course of a day or an hour without having the market go nuts. And just the psychological component of the chance of winning. If you think about gambling, I don't consider trading in this way to be gambling because we're taking calculated risks, but just that desire for people to get a quick win or easy money or spin the roulette wheel and double their double their money, or whatnot. There's always going to be that innate human drives, and trading kind of can fill that for some people as well. So even though there's a lot more technology and AI, trading definitely isn't going anywhere. I mean, it's been 16 years now since I've been doing this, and even well before I went down to the trading floor, the pits were slowing down and there were fewer locals and things like that down the pits and more computerized trading. But all right, so similar scenario to yesterday morning so far. Remember, we got business inventories and housing market index at the top of the hour. See if our 15-minute will get triggered here before that, and then we should hopefully start to get some movement. go. So short filled. So then you can set your plus 20 based off of your short price, and then the stop just becomes that other end, 78.75. Want to watch for yesterday. We really didn't have any high and low ticks that corresponded with high and low price, and therefore there weren't any tick divergences. That was one thing I kind of missed a little bit last week, and I was talking with another trader after our session on Tuesday. He kind of pointed out my mistake there. We had a little bit of, or certainly more follow through last week than we'd had in a while. And when you get a low tick at low price, and then you follow it up by breaking the low price, like in the next 30 seconds, it's fine, or it's good to kind of take that next short, especially when you're close to the 30-minute range. And there were a handful of those last week that were all trading pretty well, and I didn't take advantage of those. If we want to, we can use this minus 800-ish as our low tick for the morning, and then our high tick is still that 190. So as we undulate here, that will be at least our current NYSE tick highs and lows for reference. Yeah, if you don't want to do two completely separate accounts for the 15 minute, you can just do a combination of trading the ES and the MES. If you're already trading full ES, um, you could do like NQ and ES, but I know a lot of people, or some people, aren't as comfortable trading with a larger stop on the full ES and can't go down. If you're only trading two ES contracts, you can only cut your position in half to make it one. So if you wanted to trade the retracements in the 1 minute on the ES and then trade the 15-minute opening range breakout using the MES, you could do that, or vice versa. The MES is really not a place to stay too long. You're not going to be making huge gains as far as 1 minutes and retracements on the MES. It's more of a practice tool that has the benefit of using real money to help your trading. Just inside of 3 minutes on this number. That I was pause for a second to look at this inverted hammer. Let's see what happens at the top of the hour. Yeah, that's right, Mateo. You can now with Tradevate you can have sub accounts, so you can trade different kind of compartmentalize your funds in there. So that's handy. Otherwise, you could do something like having a Thinkorswim trading account and a Tradevate account, or Infinity, or a different platform, something like that. But I don't like to split things up too much as far as like having accounts all over the place, just for simplicity's sake and keeping track of things. Okay, so I'm going to sit on my hands for the next minute and a half until this housing market index, business inventories number, and then we'll see what the reaction is. It's tempting to do this retracement short like this. But what happens is, you could get in the trade, inside of 2 minutes, but then if you don't get that first target, or if you don't get some kind of move in your favor, and then the number comes out at the top of the hour, it's like, oh, you're just still at full stop out risk. If this happened 5 or 10 minutes earlier, let's say I was in a trade and I got a first target hit and I reduced my risk by tightening my stop. I had 4 or 5 minutes into the trade already, and then we were coming into a number, then I'd be more okay with just keeping the position on. And if I get whipped out at a number, that's okay. Most of the 10 o'clock numbers don't whipsaw so hard where you have 3 or 4 ticks of slippage like you might at the Fed meeting announcement. This would be really nice if you got a little kind of double top inverted hammer, but after, I'm not even going to bother because the hammer's going to close, or the inverted hammer is going to close, and then the number's going to come out and it's going to change anyways. Alright, so we will move our 30-minute. This is now our 30-minute low, not much lower than where we were. And now it's fair game for taking trades. Man, look at our breadth and advanced decline line. It came basically all the way to flat from like minus 1600 on the AD. And we haven't really changed. We're actually lower now than we were at the open. That is quite bullish. I'm going to draw up our full halfway back within this range to see if we get a reversal there. Otherwise, if we break out to the upside, I wouldn't think we'd have too much trouble ripping and filling this gap. That's, I mean, it's a fairly big gap, but we're kind of in this no man's land here, just below yesterday's range, not quite to Friday's gap fill. And we started to go lower, but didn't really get. I mean, we're closer to yesterday or to Friday's gap fill than yesterday's gap fill. We traded lower, didn't really get any momentum there, so like at this point, I have the 20-point target out there for the short, but then also I've doubled up my high. They're the stop 78.75, so that if we go through that, then they can get me out of the short and get me in the long. So you don't have to take those opposite trades. Years like this where the ranges are smaller and we've had more back and forth, taking the opposite after you get stopped on the first direction of the 15 has been really good. Whereas like last year, just taking the original 15 in itself was, you know, hundreds and hundreds of points just for one contract. So, but there was more movement, less straight up chop. Okay, here's our 50. Let's see, we're almost in a high tick. We're up at highs. I would, if we got a little inverted hammer, I would maybe give a stab at that. 30 seconds still on that one. Let's watch it closely. Not quite a high tick. 69.25. It's not really a hammer either. Inverted hammer, I mean. 69.25. If it's gonna drop, it kind of needs to do it now. Otherwise, you're just gonna be stuck sideways in the middle of the 30-minute range. You're kind of right on top of this other halfway back long, but we'll see if we get any momentum. A little bit. I like see how this candle is forming, and look at the high of the candle is halfway down this signal candle. So as soon as we get our close of this candle, we can bring our stop down, you know, half of what it started at. So 71, as long as this high holds. Just under 10 seconds. 43.71, 3, 2, 1, and go. All right, so we're at the opposing halfway back here, so not expecting. You should expect a little bit of pause unless we really get bearish. But our breadth and advanced decline line are not saying super bearish, saying we're more balanced. The tug of war is pretty even, so if we can break below this 61.8, might be able to get a quick drop down to lows and get some momentum, but so far just kind of as I just described, kind of paused sideways here, which is fine. It's just got to have a little patience. And I'm just going to leave the, don't even need to touch it. There it goes. So pretty much same scenario as yesterday for starters. Quiet and inside of the 30-minute range. So I'm going to sit tight until we either make it to the top of the range or back to the bottom of the range. If this became a double top and you came down and broke the swing low, you could try taking one more short, but it doesn't look like, yeah, that's going to happen. So. into new highs on the day. And immediately rejected, price rejected at the high tick. See if we make a bull flag here along the top of the 30-minute range. Okay, so essentially a tick divergence. Therefore, this long, 43.79 and a quarter long, is where I'll put my order to. It just came into a new high tick here. Hang on. Can you click one more tick? So you do have a high ticket highs just after breaking the prior high ticket highs. It's kind of right on top of the 30-minute range if you want to go for it, but it'd be nice to get a price move just a tick higher. There we go. Okay, so now we have a tick divergence, so it's a 43.7950. Let's see if it can hold up without, falling all the way back to the halfway back long. Oh, okay, there we go. First target. Let's move our stop to, well, break even, but then let's take a look. 43. So, okay, all right, well. 81. Getting a little quick movement. I'm going to go to each candle here. So 84, 43.84. I'm going to move my stop up just as we're getting a quick rip. 43.84 I have my stop at. So is that going to be the extension? Not quite. 83.50 would kind of be the extension if you want to drop it a little bit. Don't usually advocate dropping the stop, but just to get it more dialed into just below this extension long. Because the next halfway back is kind of far away. It'd be all the way down to 81. Let's see if we can get a bounce here. This is where you could go into the bull flag and kind of drop below and get stopped. But if we hold and make a new high, then we can get our stop moving. Yeah, so if we make a new high, do we have another high tick? 11. 11, yeah, so we continue to get new highs at new high ticks, and then if we break this 711 high, that's what makes the tick divergence. And on a trending day, you constantly get a high tick at highs, and then 30 seconds later you make a new high. And there we go. Perfect. Okay. So now let's bring our stop up again. 85. 43.85. 43.85. If you were to come up here and tighten it to each candle, you're only at really an 86 and change. So I'm going to use 43.85 as a stop. That's the next retracement. Man, it's just a clone of yesterday. Basically identical. Sideways in the first 30-minute range and break to the upside, and then a pretty robust move without much of a pullback here on the break. So then what? So like what I'll do, I get 43.85. I kind of just come up here and project the next retracement, and I'm looking at the 60-1-8. Okay, 43.87, 67. So that's about a 43.87 stop. So I kind of have that in my mind already, so that if the price spikes up, my eyes are kind of already looking at 87 on the trade ladder, and then I can come in, draw it, and then move it quickly. Because when the market does get moving quickly, sometimes it can be difficult to, you don't want to make a mistake by clicking on the wrong thing or whatnot. So it's like as we start creeping up here, I'm thinking, okay, well, 87 is going to be the stop-ish. If we make it to the negative 23, that would be a double top. And I'll leave it. If we can go one more tick, 86.50. If we go one more tick up, there we go. Okay, so 86.50 is the stop. And going. 86.75, yeah. Basically taking the 60.18, rounding down and subtracting 2 ticks. Inverted hammer up here, this could be it. Meaning the end of it. High tick 70.13. One tick away. Came one tick away. And there she goes. Okay. I don't have a order underneath this 86 as the short. It's if we go into a bull flag, was that the high tick? 15, 13, 15. No, it was not the high ticket highs. I'm gonna let my dog out and then we'll recap this here. Alrighty, so yeah, this inverted hammer here is not corresponding with the high tick. It's at 15, and the high tick, well, oh, sorry, my eyes are tricking me. I thought it was 13. I swear it was 13. It is the high tick. 715, yeah, okay. Forgive me, it is the high tick. So it's an 86. I don't, uh, on a strong uptrend like that, I'm not just overly eager to take every counter trend, but it is the high ticket high, so we'll see if it goes, see if it does anything. It is a 13. Thanks, Mateo. I knew it was a 13. Okay, so I swear my eyes are playing tricks on me there. Yeah, it was 13, but oh well. So yeah, that was not a great one. See if I can redeem myself here. 82. Just gonna get out of this thing here. 82, 88 and a quarter there. All right. Let's recap that last one. Yeah, 713. Huh. All right. That was just a goof. Okay, yeah. So the long, basically, that is the. I mean, it's the first retracement on top of the 30-minute high. That in itself is great. Um, we got this tick diverge. So, oh man, this is a perfect. Take a screenshot of this because this is exactly the tick divergence that just talked about. So 708, we had a high tick at highs here. And at 709, we made a higher high, 710 rather. 710, we made a, so at this point, we have a high tick at highs. So you say, okay, well, that could be the high of the day. Unless we break highs and we don't make a new high tick. And we know that on a trending day, the pattern is to make a new high price after that high ticket highs, if it's an uptrend, or a new low price after you make the low ticket lows. So we made our new high price, had the tick divergence, draw up the next retracement, perfectly came down to the 50, and then just took off. So got the 3-point first target, drew the next retracement. This one was pretty big. See how it went beyond the negative 23 all the way to the negative 61.8. So you want to come and draw an extension and use that 61.8 minus 2 ticks, round down minus 2 ticks as your stop. So that's an 83. So put your stop down here just below the 61.8. And then I tend to just go back to retracements after that versus going up an extension after extension. Then they get super, super small. So if we draw the retracement like so, trail the stop again, and then go up again, and that's where I got taken out. Not on this, yeah, right here. Not none of this pushed down, but this one, 716 candle. And now we're kind of gone sideways. So yeah, that was a good one. And those are the ones I was kind of skipping out on last week because we hadn't. I mean, to be fair, we hadn't really had a lot of solid trending days for a while, so I was a little hesitant on some of those. But yeah, and then we still got the 15 minute, so that's going to be a 90, basically a 99 if we can get up there. That would be nice to follow up a winner with a 15 minute, and then our gap is, yeah, 44.05 and change. So shouldn't have any problem filling that gap now, making that 15-minute opening range breakout hit, and that would be two solid trades uh, that more than, you know, 10x the two little 1 minute. One was a goof on my part, but the other one was fine. So we'll see if we can get there. You can move your stop to -4 on the 15 minute. Yeah, the first Stan, that first tick divergence, we made the high at 707, pulled back, but then we came up and made the new high tick at highs. So I I liked this little tick above. So this move went above these couple of candle highs, and that made a new tick divergence. The first one, if this cluster right here did not get a high tick, then drawing the retracement like that is totally fair game. But because we got a new high ticket highs, that can put some selling pressure and put this long in jeopardy. Now you've got a 50% at the top of the 30-minute range that lines up with the prior swing high. So that's still a pretty strong move long. But if there wasn't this follow through to the upside, this is where we would have seen it roll over, where the market peaks above the 30-minute high and then rolls kind of like on the downside to the 15-minute low. It was something like this. We went just below the 15-minute low and then turned around. That's what you would have seen at the 30-minute high if there wasn't the onset of buying here. So that's where high ticket high, market can sell off. Low ticket low, market can rally. And if we had got that high ticket highs and sold off and dropped back into the 30-minute range, back into this area, then you would definitely want to just sit on your hands, not do anything, so don't get chopped up and just end up with opposing tails and back and forth and nothing really doing. That's a pretty small range. That's only 10 points. So, you might be able to get a short at highs and a long at lows, but if you're drawing a retracement and the market like rips a little bit, by the time you draw your retracement, if the range is too small, sometimes you're already at the midpoint, the halfway back of the of that range. So now our high tick is still that 713, and our high price is 723. So we can continue to make new highs until we get a new high ticket highs. And remember what I said earlier, we were minus 1600 on the advanced decline line. We came back to the zero line, or 2-0, and we were lower in price than we were at the open. So at the open it was minus 1600. Half hour in, we were lower, and our advanced decline line and our breadth were higher. That's a very strong, bullish signal. And this halfway back short was kind of the last ditch effort, or last point where the market could have rolled over. And so kind of saying, all right, well, we're going to see if it rolls over. If it doesn't roll over here, then switch to the very next long opportunity. There wasn't really a crossover in the middle of that here to take that as a long. So then the next long was the one we took right here. And that's pretty much how it's done on repeat every day. Put together your framework by looking at the prior high, low, and close, the prior day's high, low, and close, or any near unfilled gaps, looking at the 30-minute high and low, looking at the NYSE tick. So if you kind of focus in on one market and one time frame for starters, and then kind of expand a little bit from there within that market, if you're going to do, I kind of have these three strategies: the retracements, which has always been the bread and butter, the 1 minutes that have been more prevalent lately in the last 6 months, especially, and then the 15-minute. And they're basically all done on the ES. So before you start expanding to other markets, it's good to master one. Feel like you have a good handle on one. And then the other side of the coin is like, okay, if you don't, I guess asking yourself, do you need to expand to other markets and other time frames? Like filling your day with more stuff. If you say, okay, well, I'm trading the ES at the open, then I'm going to go trade the NQ at the close, or I'm going to trade the currencies at the European Open. Like take a step back and look at your day, and the things that you like doing throughout the day. If you've got, if you're financially independent, where you've got more income coming in than you're spending, and you're enjoying yourself, you don't need to work yourself into the ground. Use the other time. You can, go. It's okay to, volunteer or do things for free if you have skills in other areas. Use your time in that way. It feels pretty good, and it's helpful. So you don't necessarily just have to drive yourself into the ground to make more. Ha, that's funny, Mateo. I think if you really focused on well, let me say it this way: the ES is definitely the most traded futures contract, and so you have the benefit of the most activity volume. I mean, the NQ gets a lot of trading activity, but not quite in the same way that the ES is being used as a hedge, or various, for leverage and things like that from hedge funds. It's just compared to the Dow, it's 500 stocks versus 30, and the tick size is bigger, so you're going to get a lot more newbies and beginner traders trying to trade the NQ, which moves much faster and is I find much more challenging. But because you have that 1250 tick size, $50 per point on the ES, it can be a little bit of a barrier for some people, but that also slows down the trade ladder. I mean, pull up an NQ and an ES trade ladder side by side, and the ES is much easier to manage, um, to move up and down. You're not constantly like having to recenter it and scroll super fast, and then you start scrolling and you're trying to click something, and then price is shooting all over the place. So yeah, ES. You also have the NYSE tick, which you have the Nasdaq tick, but definitely from a day trading perspective, ES I find is that sweet spot. If we came down to the full halfway back, so the full halfway back, whether it's a long or a short on the day, is always worth looking at. Like it's a powerful, big retracement. It would be kind of right near where that prior entry was, near the top of the 30-minute range. But we should hold this kind of, we came and retested that 86, kind of held along that and moving higher. So we should move up from here. Otherwise, yeah, that would be the next long stop would be a break, come down to 43.80, and then have to look for a re-entry there. See if we can get our 15-minute filled on this push. And then remember, our gap fill is not too much higher than that, just above. Maybe one more bull flag and then push up. Let's see. No, she's going almost. Wants to push. Get up and fill. Come on, buddy. Touched it. Might have to wait a little longer here. Well, it might be a little bit longer bull flag here if we look on the 5 minute. The full halfway back would look something like that. That's a little bit high off the 30 minute for me to take that. I would call it quits here, see if probably come up and fill this gap from yesterday. But yeah, not a bad day. I think we'll leave it there. I'm not gonna try shorting. Counter trend here. We still have the high tick divergence that went off, so moving higher after that, so we can continue to make new highs until a new high tick is reached. Um, but yeah, not a bad day. If you have questions, shoot me an email or pop in the Discord. And yeah, we'll leave it at that. So hope you have a great rest of your day. And keep an eye out later this week. We got more news. Jerome Powell speaking Thursday, so should keep things moving pretty decent the rest of the week. So yeah, watch out for that Thursday afternoon. Anytime Jerome Powell speaks lately, markets don't seem to like it too much, no matter what he says. So anywho, hope you have a great rest of your day. I'm gonna end a little bit early here. I gotta go visit my friend of mine here in a post surgery, so I'm gonna run over and see her and go for a bike ride. So hope you have a good rest of your day. Looks like we'll probably get this fill here coming up to the 15-minute high. There's that bull flag kind of setting up as I was talking about, and work our way up to the gap fill. So hope you have a good rest of your day, and I will talk to you guys all soon. Thanks a lot.